What is up, guys? Welcome to the first episode of what I'm calling Swing Trader Weekly, where basically I'm going to be using probabilities and if-then statements to find out exactly where retail traders are going to be absolutely screwed and how do we turn that into trading opportunities for us. My entire premise for trading after doing this for 20 years is how the hell do I steal money from all these retail traders who are the vast majority of the population? They're not even traders, they're just market participants. My entire goal is to take money from their account, probably yours, and put it into mine. So if you want to stop being a retail trader who gives all your money away to pros, definitely hit that subscribe button because I'm going to be updating this channel every week with Swing Trader Weekly. So let's get right into the charts. Anyways, guys, my name is Cameron Fu. I've been doing this for 20 years. My old channel, 450K subs, bunch of bullshit happened with it. ChatGPT said I needed to start over. So we are here on a brand new channel, not by my choice, but by that's just what we're doing. All right. So let's get into it. We're basically just going to start out from a top-down analysis, looking at crypto, looking at the US dollar, stocks, commodities, a bunch of different stuff, and then kind of look at where are the levels that we should be looking at, and also kind of look at what we just actually did to make some money in the market to give you an idea. So first and foremost, what just happened recently was Bitcoin went on a nice little run, peaked to the upside, slapped everyone down. Everyone's probably like, oh, the bull market's back. We got a bunch of people talking about it on Twitter. What happened? The market got absolutely crushed. False breakout. Who could have seen that coming? Who could have seen that? Exactly like I said before, my entire goal is to look at where our retail traders going to get stomped, and that's exactly what just happened. So, as I said here on January 13th, today is January 24th, see anything similar to last time around, note that there has never been a 50-day moving average breakdown on the weekly chart on a mega run without a major pullback. In fact, and actually a full-blown bear market. And we just had that trigger again. What I'm looking for here is a potential revival breakout pattern, which is one of the patterns in my 9-cycle framework, to be a false breakout. And if that happens, we are then triggered to then go short, because that's gonna mean this breakout is actually false, faking everybody out. We're gonna see some huge selling pressure, which we can then short into. So this is the illustration that I posted January 13th, again, it's now January 24th, that we're looking for the breakout, fake everyone out, and then see more downside. As I said before, we've never had a weekly breakdown of the 50-day moving average without an actual full-blown bear market of 50% plus pullback on Bitcoin. We're already at 50% pullback on Ethereum. So that's exactly what happened. We got short on Bitcoin and we are now in some nice profits. I do definitely think that we are going to see more downside. This was me adding 1.5% and then said I would scale in on a grid as we continue to push up, because I know that's just going to be a fake out to the upside before we see continued downside. That was at about 92.9 or 93K. Now, if we look at Bitcoin, we're at about 89,000. So basically what we're going to do here is look at where the most major monthly and weekly levels are, because those are the areas that we're going to be wanting to buy into Bitcoin. And those are the areas where retail, who's continually buying the dip that keeps on dipping, they're going to be stopping out, and that liquidity can turn into a trading opportunity for us. So let's just take a look first and foremost at the monthly chart. A lot of you people might not be wanting to look at the monthly chart, but that is where you're going to see some major levels, of which are then definitely huge buying ranges. And when I'm typically buying into a trade, I don't like picking one price. Sometimes I do, but when you're picking one price, you're giving yourself a lot of chances to screw up, because you're trying to predict exactly where price is going to bottom. What I would rather do is look at a weekly or monthly chart and look for a range, and that means I'm going to scale in to that entire range, because I have no idea where it's going to bottom out, but I can be a lot more accurate if I give myself wiggle room to scale into a position within a major demand zone on a higher time frame chart, such as the monthly. So what we're looking at here is this was the biggest imbalance in price. This candle right here, that is when a lot of buying came in. And if we come back into that zone, that would be looked at as institutional demand. So essentially this whole area between about, use the closing price, 70K, even all the way down to 48K. We really have to take both those zones, that entire range, as far as the monthly demand zone, as the area of where we would potentially like to be buying into. I think that would be a pretty solid area to be buying into this. But there's also a level just below it, right around here. And typically what happens on major levels is the first level, yeah, it can work a bunch of times and it turned out to be a great trade. But when you see a level just on top of a level, typically what happens, and where most people get screwed up, is they might only decide, hey, I'm just gonna take this first level. And if I'm gonna go all in on this level. But what happens a lot of time is that first level is broken down. And if there's a level just below it, a lot of times everyone gets stopped, cleared out because they all thought this was the level, break down the lows of the previous level, boom, goes right into that next level then, and then that's the bottom. Everyone who had been buying the dip that kept on dipping gets totally wiped out, and they're totally screwed, lost all their money, and never cashed the bounce because they only looked at one level. So there's multiple ways you can do that if you wanted to scale in. Is one, you take that entire fucking zone, which is a lot of breathing room. Essentially, when I'm entering into positions, if I was gonna take that whole zone, of which I'm not gonna take this whole zone, is you divide your order up into 50 different fucking orders all the way down, instead of just one order at one price. And divide that same amount of risk that you were willing to take on that one trade, split it up into 50 different orders on the next side and that entire way down, because that's huge. Okay, the other option is you take one trade with a set amount of risk, scale into that zone, also with a secondary plan to buy into this zone just below it. Okay, that is how you ensure you participate in both different scenarios without totally screwing yourself. What most people do in trading is go one big shot at the one big dip, hoping that it's the one life-changing moment. They get stopped out, they get cleared, and they never catch the bounce. Okay, you have to be prepared for all different scenarios in trading if you want to actually succeed. And most people don't actually do that. They prepare themselves for the scenario that they want to happen and not prepare themselves for the scenarios, all the scenarios that could potentially happen. So you really have to be thinking open-mindedly about all different scenarios that could potentially be happening in order to find success in trading. So when we're looking at BTC right now on the monthly chart, it's not the cleanest zone right there. It's a little too wide. And then there's the next zone just below it. So now that we have the monthly zones, we can then fine tune this by going down to the weekly. So let's take a look at the weekly chart here. If we were going to be buying in, one, what are we kind of forming up here? We're essentially kind of forming up a left shoulder head, a right shoulder, and potentially a head and shoulders breakdown, which would look like this: liquidity sweep down into this whole entire zone, and then maybe all the way down into the 40 to 39K level, of which I wouldn't be surprised if Bitcoin goes all the way down into that level. If we look at any sort of pullback on BTC since the beginning of time of Bitcoin, every single breakdown of the 50-day moving average after a bull market, I believe, had a retracement of like, at least 61.8% on the fib levels. I got the wrong fib here, guys. So pullback here on this, this pulled back all the way to essentially 78.6. If we're gonna start the run right here, all the way to the top, 78.6 on BTC, where would it be? It landed right exactly in that secondary monthly zone just below. So that would be a high probability area where this could potentially hit the bottom. Also, I do think that it could possibly be in about December of 2026, just based on the cycles. I believe when I looked it up previously, it was like between 390 to about 450 days every cycle for it to reach its bottom before it actually reaches top. Just to gauge that, we can go from here down to the bottom here. That was 364 days from the actual peak right here before it hit the bottom and then started to trail up. So let's just say for on average around 360 days, where would that place us? If I can find my freaking tool I just used. 360 days out again is, well, that's September of 2026, and upwards of 400 days, 60 days, that's about December. Okay, so somewhere in that range, we could probably see Bitcoin come down into that zone, if it ever gets down there, right? This is all based on if then. I don't predict, I'm not like having, a massive amount of bet that we're gonna go down to those prices. That's not how I play this game. I bet on if-then statements so that I know that if price gets down there, that's looking like a buy opportunity. And I'm currently short right now because we were waiting to see if it turned into a false breakout. Then we know that retail longs are gonna get screwed. There's gonna be a huge cascade of everyone getting stopped out. And then we got short. Okay, so I never predict where price is going. I look at where the zones are, where everyone's gonna get cleaned out, and then use that as an opportunity for me to get in and then actually make some money off it. But again, when you're seeing, especially in crypto, with the fucking liquidations that happen so fast and so large, a lot larger than a lot of people understand, that's why you have to be looking at a wider zone and scale into it, as opposed to picking one price with a tight stop, which you then just get cleared out and you just become part of the 98% that always loses on all these liquidations, while I scale in and then scale out and make money. Just for an example of a recent BTC scaling plan that we had, the last trade that we took. So here's the Ethereum dip buying plan for longs, right? We were looking in to be scaling in to that entire zone, right? Going all the way down to this weekly demand. This is the daily chart, weekly chart, but this is kind of like the clearance level, but I didn't quite know. I knew if this low was swept, we were gonna see a continued dip. Not sure how low it's gonna go, so I was gonna scale in, but all the way down into this nice little weekly demand zone. So quite a large range from about 2,900 down to 2,300. And what did we do? On that trade, you can see this is my first orders getting filled, and I'm scaling in a wide grid, okay? Until eventually, price came all the way down into that zone, kept adding to the order, kept adding to the orders, added more to the orders, added more to the orders, until eventually, nearly 30K profit. You can see $10,000 on Ethereum and $17,000 on Bitcoin. You can see me scaling in this entire range and then selling as we started peaking back up toward 3K. So it makes a huge difference when you give yourself the opportunity to scale into a trade, because you're not picking one fucking price, especially in a dipping crypto market. So right now, BTC, not super clear of where we're gonna be buying that dip. It might be a little more clear if we look at Ethereum here, which is already down 50%. Now, I do think that there could be a dip buying opportunity right around here. Okay, Ethereum, sweep everyone out right into this zone between about 2,500 down to about 2,300. And then there's gonna be a shorting opportunity. Like, I'm not looking to buy this dip and then have that be the low and I'm just fucking balls deep long here. That's me getting in short and then waiting for it to hit this demand zone or supply zone here and then selling. And then maybe I'd even short for this to come all the way back down into this zone down here, okay? So that's kind of what I'm looking at here on Ethereum, to drop all the way down. Now, there's also several altcoins that I'll be looking at and monitoring, because altcoins are probably going to drop a lot farther than Bitcoin and Ethereum. But these are the kind of things that I'm looking at and looking for when we're looking at dip buying opportunities. Essentially, when crypto's in a bear market, after the 50-day moving average is broken, it basically just goes like this, okay? Lows are swept here, like this. Here's a low. Lows are swept. Everyone gets stopped out long, then we see a spike to the upside, price comes back up into supply, which you can short, and that just continually happens in bearish market structure until we finally reach the bottom. And the bottom typically isn't happening until about 60% plus on Ethereum, and we're only at about 50% at this low right here. So I think we could definitely go at least here, and possibly even lower than this right here, and then this would be like, okay, this is a nice buying opportunity down here on Ethereum between 1859 and 1354. Now, again, that's not a prediction that we go down there. I don't predict where prices go. I look at where, if that price is met, I know people are fucked, and that's going to be a buying opportunity for me. Okay, everything I do is if-then statements and probabilities. So right now, as of like my general analysis of Bitcoin is, we got short right around here after this turned into that revival breakout that failed, okay, and also has broken down this ascending trend. And what's happening right now? This is a bearish flag that's forming up right now. Okay, so we got short right around here at about 93,000. And essentially, I think what's gonna happen here is this flag is gonna continue to flag in this range, and we're gonna break this all the way down and at least come down towards 80,000. Okay, I will be locking in some gains as we start getting into this territory, because I have no fucking idea what's going to happen beyond that level. But I do think that the next major zones, looking at the weekly and monthly charts, are down around 70K to 50. And then ultimately, I think we could sweep everyone out after a fuckload of crazy price action to confuse the shit out of everybody, and then break down lows and potentially even all the way down to 40 to 39K. Again, no idea. That's not a prediction. That's an if. If it does that, there's going to be opportunities to take advantage of that situation. Most people don't plan for if, they plan for now and don't think about the future. But that's basically what we're looking for right now. I'm still short on Bitcoin, still thinking we're going to have more downside potential. Taking a look at, let's take a look at silver, okay? Because silver is going on a monumental fucking run. Now, this is fucking crazy on silver. This is going to implode on itself. There's no doubt in my mind about silver and gold both imploding on themselves. It's going to happen, 100% fact. You don't have parabolic moves like this without it unwinding. It's just the physics and laws of nature when it comes to financial markets. Okay, parabolic straight up move like this, the math It has to come down 110% in a very large factor. You can even look back at what happened on silver last time. Similar pump to the upside. This thing pulled back. How much? 74% over the course of the next 1600 days. This is just the laws of physics and math in trading. You cannot have a parabolic move without a massive unwinding. The difficulty is if you're trying to trade it, you don't know when the top is going to happen, right? All these fucking spikes right here, these are short squeezes. This is a short squeeze, which means I would bet that this isn't a bunch of people FOMOing in long. Yes, there are probably people that are FOMOing in long. There definitely is, but this kind of move like this, that massive spike at fucking ATH, this is a lot of shorts who are trying to call the top and they're getting squeezed, which means they are being forced to buy silver because they're having to close their short positions. Now, a scenario that I could see potentially happening, I don't know. This is an if-then statement. If we spike over $100 right here, which is a very major hold number. Now, I guarantee there's still a bunch of shorts who have a bunch of stops that are gonna get liquidated, probably all the way up to about 120. But if we don't continue to pump here and we start folding back under $100, that could turn into an area where that key level of $100 is now, it met its match, right? It finally got to that number where the psychology of reaching that level is already over. There's nothing more to look forward to. It already reached it. It's kind of like a buy the rumor, sell the news event. Now the news is known, the news is out. We hit $100 per ounce of silver, which is fucking wild. Now, if we break down below 100, that means that level is now going to be failed, and it could be a potential short if we spiked back into 100 and retested that level, and then down to the next level, of which the next actual demand zone, if you're actually looking at this, one, there's a zone here at about $90, and then the next major one is all the way down here at about 75, of which that would kind of be your short-term profit target here on silver for a potential short, and then buying the actual cover to lock in your profit. Looking at the NASDAQ. All right, 50-day moving average breakdown. This is just trading sideways for quite some time now. This is a very difficult market to look at because it's very closely tied to what's going on with Trump and what's going on with geopolitics. And every other day, Trump's talking about something that's causing a lot of confusion in the markets. We're pumping, we're dumping, we're pumping, we're dumping. But the fact is, we are on an epic run with the NASDAQ and S&P 500. And there is going to be some sort of pullback eventually, something like this. You don't just keep pumping, and we keep getting a more and more bearish divergence. As price continues to go up, fear and greed continues to go down, which means it's running out of momentum and likely going to see some sort of pullback. Who knows what's going to happen on this, but as of right now, I think this is looking more like a potential short on the S&P 500. As price comes back into this zone after breaking bullish structure, when this low was broken, right, that began a new bearish market structure. Also breaking down the 15 moving average, we're now retesting supply, which then leads me to believe the higher probability trade would be getting short in this zone for the next level of either taking profit right here or even coming all the way down into this zone and taking profit right here. So that's what I'm thinking on the S&P 500 right now. So anyways, that's what I'm looking at for this week, guys. Like, comment, subscribe to Swing Trader Weekly. Again, I do this also even more in detail with my mentorship group, Quantum Cipher. If you want to trade where I trade at Blofin. And if you want to get funded, you can join my prop firm, which I am also a co-founder of, Hydra Funding, where you can get instant access to crypto, forex, and futures as well, upwards of 200K in profit. But anyways, guys, I do this every week for my group and talk a lot more about altcoins and other things that I'm trading, but in my actual positions. But in this series, I kind of just want to be able to show you guys what's going on and how I actually operate and think as a trader. I think it's important to kind of keep you guys updated and educated on what my thought process is. I used to do this on my other channel, which had 450K subs, but I hit 450K subs in 2022. 2026, still 450K subs, okay? There is a lot of damage to that channel. It's got a lot of history of bans, strikes, and everything. So GPT said I had to start over, so here we fucking are. Fuck my life. But anyways, like, comment, subscribe. See you guys in the next one.